Hello and welcome everybody to today's Commodities Corner presented by myself, Phil Carr, at the Gold and Silver Club. During today's session, we will of course be covering live market analysis. We will go through a watch list of trade ideas. We'll go through a forecast of where we expect gold, silver, and also crude oil to be heading next, providing live support, answering questions. As always, guys, any questions, any comments, feel free to put those into the chat and we will go through those during the course of the session. Okay, so let me introduce you to the Gold and Silver Club. The Gold and Silver Club is regarded as the go-to authority on commodities trading. Our analysis and our opinions on the metals, the energies are routinely sought by major financial television channels and publications which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. For more information on the Gold and Silver Club and our expertise, please do visit www.thegoldandsilverclub.com. Okay, fantastic. So with that, we'll have a look at some of the major news items which are coming up over the course of this week. We did have non-farm payrolls come out on Friday, which essentially came out as stronger than expected. The headline number provided certainly some volatility among a number of commodities. More specifically, we saw a significant breakdown on both gold and silver into the close on Friday. Over the month of July, gold is now down over 3%. So far this month, silver is now down over 8%, which have provided some great opportunities to sell into those markets and take advantage of the price breaking down. Now, as we go into this week, what major news items do you need to have on your radar? Well, certainly Janet Yellen testifying over Wednesday and Thursday is likely to provide some volatility. That's one of the highest impact news items this week across both Wednesday and Thursday at 3 o'clock London time. Today on Monday is a relatively quiet day in terms of major news items. Tomorrow on Tuesday, we have the JOLTS job openings, which is occurring at 3 o'clock London time. Also on Wednesday, oil has been a big mover over the last month here, both to the upside and the downside, taking advantage of buy positions, sell positions. But we've got crude oil inventories on Wednesday at 3:30 London time, which frequently can provide some great opportunities right off the back of the inventory information, the inventory data. Friday, we've also got the core CPI numbers, which of course can move the markets significantly as well. We've got the core retail sales as well coming out at 1:30 London time. So in terms of scheduling this week, those are really the major data items I would look at for trading commodities, most notably gold, silver, and also oil as well, that you want to have on your radar for this week. Now, over the last week, we've taken advantage of a number of trading opportunities on, of course, the energies, the precious metals, which we'll talk you through, and also the commodity currencies. Our trading performance using our exclusive research-driven strategies has been as follows. So we've taken advantage of the breakdown in gold, exiting another sell short position into the close on Friday. We've actually had multiple positions on this over the last couple of weeks, taking advantage of both the buy side and the sell side. But again, another trade executed with an expiry on Friday, which has worked out in profit again. Crude oil, as a lot of you will remember, we've been long crude oil throughout this whole move from the $42 per barrel zone up towards the peak here where it's broken out up to $47 per barrel. It's subsequently turned over now. We're looking for new, fresh opportunities on oil to get in again on the sell short side, which I'll talk you through on the chart very shortly. But essentially, we came out of another buy position last Tuesday for the price to close higher. And also we've taken advantage of the weakness here in Australian dollar, US dollar, and I still actually like this market for the potential to break down further as well over the course of this week. We'll have a look at that price structure very shortly too, as well as we'll have a look at equities too, because the S&P 500 is having some a little bit of weakness today as well, which is worthwhile us just taking a look at too. Okay, so we'll talk you through how exactly we take advantage of the binary.com platform, how we utilize this on both the buy side, the sell side. So essentially, when we bring up a deal ticket, you have the criteria to add in the start time, which could be oftentimes we go for now because we want to execute the trade immediately. We'll have a view that we want to buy or we want to sell it for the price to be higher or the price to be lower. The duration of the trade, it can be anywhere from 10 minutes, 20 minutes, half an hour to several hours. If we're looking to do a day trade, if we're looking for it to be longer than that, we might pick several days. But most of the time on a binary trade, we want to be in and out of the trade relatively quickly, taking advantage of short-term volatility. What is great about binary trading is you don't need a stop loss, you don't need to take profit. All you need to be able to get right is essentially the price either closing higher than your entry price or closing lower than your entry price in order for you to win the entire trade. Now, in terms of the risk on each trade, is very transparent, as I'm sure you're aware for those of you who've traded on the platform. But if not, I'll recap it just to demonstrate to you how it works. Okay, so essentially when you're taking on a trade, you would put your payout, and that can be anywhere from a few £1,000 or a few thousand USD or euros, whatever your currency, your local currency is. And you can be looking at that in terms of a smaller position size. So it might be that you're getting into smaller on a smaller account. So it could be anywhere from a few pounds, £5 or £50 or £500, £5,000 as the payout. But essentially, you know your stake and your risk up front. So when you're looking at a higher or lower type of trade, you can see the stake here, for example, my payout is £5,000 and the deposit on the trade there for the price to be higher is £2,843 and 26 pence. So that is the deposit on the trade. If I win the trade, I make £5,000. If I lose the trade, I lose the stake. I lose the deposit on the position, which is here in the red here. That is my stake on the trade. For the price to be lower, again, if I win the trade, I make £5,000. If I lose the trade, I would lose the stake. So £2,853 and 1 pence there for the price to be lower. So it's all very transparent. You know what your risk is up front. You're not going to risk more than you know you are risking on the position, because everything is very clear cut on the position. You can't get stopped out prematurely on the trade if there's a lot of volatility, because you're looking just for the price to close higher or lower within your direction. You don't need to have a predetermined take profit in the trade as well. So it's great for trading news. It's great for intraday, shorter term trading, as well as some of the swing trades as well. If you've got a view on the market, but you don't know how it's going to move within a short period of time, but over the course of a week or 2 weeks, you have a view that the market will either go higher or lower. It works in these scenarios as well. So binary gives you a lot of flexibility for your trading and allows you to take trades where you don't need to be constantly there trying to manage the trade. So from that point of view, it is very lucrative. So I will move you over to the charts. We'll talk you through some technicals, what we're looking at on the charts, the major trading opportunities that we see lining up today. Of course, if there's any questions, any comments, do keep those coming during the session. We're happy to go through those as we continue to analyze the market. So I'm just going to share my screen with you. Hopefully you won't lose any of the information or the sound here. So first of all, we're just on gold at the moment. Quick check-in. Yeah, thanks, Reese. Okay, super. So first of all, if we have a look at the gold market, gold has dropped so far over the month of July. It's dropped 3%. On Friday, we came back down to a major level of support, which is sitting at approximately $1,207 per ounce. And we, in fact, today, we've broken below Friday's low. We spiked a little bit lower here, and we found support around just above 1,200. It's $1,204 per ounce. So we're sitting around this zone. As you can imagine, we've had a lot of questions at the Gold and Silver Club, what we expect next for gold, for silver. Are they oversold? Can we buy at this level? Is there more downside? What I would draw your attention to is Friday's move off the back of non-farm payrolls has meant we've had a close below the previous swing low. That swing low was from May. Okay, that was a major level which was breached, but not only breached, the price closed below that level. Therefore, traders who are selling into this market are targeting the next swing low here, which is going back to March now. And that level sits approximately just under the 1200s. If you look at a zone, it's from 1190 to 1200. That would be the downside target for a lot of traders at the moment. And then at that level, we're liable to come into quite a lot of congestion around that level. It was a congestion zone back in January of 2017. It provided some support and resistance back in November of 2016. And overall, 1200 is quite a key psychological zone as well, because of it being a very strong round number. The 1300 zone is very strong as well. As you've seen there, we created a double top just below 1300s. And at the moment, we're seeing a little bit of support just above the 1200s at the moment, where we're getting a bit of a bid on lower time frames. If I drop it down, for example, just the 30-minute, you'll see that we have got a bit of support. We're consolidating at the moment, but there has been a little bit of support around this level. Short term, there will no doubt be some short-term intraday trading opportunities to trade some retracements. Today, we want to see whether short-term the low has been put in for the week, which is approximately just above the 1200s at the moment. We're currently seeing gold trade at $1,210 per ounce. It is possible that it could get a retracement back towards the upper end of the trend channel here. I would suggest in the short term, though, rallies could be capped underneath $1,250 per ounce, which is this major yellow line on the chart here at the moment. And in fact, I would also look at this major trend channel, which now takes the price up to around 1,230 as also a potential zone where traders will sell into rallies on gold. So a revisit of the 200-day moving average, which is just above $1,250 per ounce, could see gold get sold into on rallies, but you could still, especially for binary, you can still take advantage of short-term rallies higher as long as you're in and out of the trade quickly, and then you look to reverse again on weakness. So right now, gold today is getting a bit of a bid above the 1200 zone. It hasn't completely broken down and continued to follow through to the downside today. We've just about clipped below Friday's low, but it is getting a bid just above the 1200 zone right now. So we are seeing a bit of support at that zone. Over the course of this month, I would not be surprised to see 1200 or 1190 tested. That wouldn't be surprising, but it might be a knee-jerk reaction and a move down to that level off the back of maybe even Janet Yellen's speech or some other news item, which creates some short-term volatility, a breakout on the US dollar, and a shakeout for gold and silver. And then the 1180, 1190, or 1200 zone could be tested, and at that level, we might see some support. We are oversold in gold at the moment, so in terms of major levels, it is oversold, but don't let that be just your overriding process for making a decision as to whether to buy gold or silver. Just because it is oversold does not mean it cannot stay in oversold territory for some time. There have been periods where gold has stayed oversold for 1 or 2 months where you would have been wrong to try and pick the bottom. A good example of this would be here. Going back to the breakdown after the US election, over November of 2016, the market got oversold relatively quickly on a break back down to approximately just above the 1200s. It didn't stop it from getting very close to retesting $1,100 per ounce, and it still broke down another 800 points. So don't only use that for making trade decisions. You want to be able to monitor the markets on an intraday basis, day to day, and see what opportunities are there each and every day. Now, moving over to silver. Silver was quite incredible last week over Thursday and Friday. For those of you who trade silver, you know this market. Thursday overnight during the Asia Pacific session, we saw a very quick flash crash in silver where it broke down within 5 minutes over 10%. So a huge move, but it was very quickly bid back up again. So we saw this spike low down to very close to $14 per ounce. It rallied back, managed to retrace again, closing to around the levels from the 13th of December 2016 swing low. So we closed around those levels. The non-farm payroll wasn't really very supportive for silver, so it treaded some water over Friday. Overall, it closed lower on the day, but it didn't come all the way back down to its spike low around the 14 level. Now, where we're sat right now is silver is currently starting to roll over again today. So it's looking a bit weak. It has broken down more than gold. So silver has broken down over this month, over 8% now in July. Gold has only broken down 3%. If you look at the gold to silver ratio, currently that favors gold more so than silver. So silver is much weaker than gold, particularly after this big breakdown in price that we saw on Friday. Now, something very interesting about the gold to silver ratio that you should be aware of is when the gold to silver ratio gets to 80 to 1 or higher. So essentially, if you take the price of gold, which is currently trading around $1,200 per ounce, and you divide that by what the price of silver is. So if we take, for example, 1,200 and we divide that by the price of silver at the moment, which is current, actually we'll go for it at the current price, 1,210, and we divide that by the current price of silver, which is 1,530, that positions the gold to silver ratio at 79, okay? So it would take 79 ounces of silver to buy 1 ounce of gold at the moment. It doesn't stay like that for very long. If you go back historically for the gold to silver ratio, it doesn't often last for long at 80 to 1 or higher. It doesn't last for long at those sort of extreme levels. So I would expect it won't be too long before silver does snap back in price, that we do see some sort of stronger buying opportunity. But short term at the moment, a revisit back towards the 14 level would still potentially could be on the cards here. That would still be around the 80 to 1 level, but I just wouldn't expect the price to stay there for weeks and weeks and months and months. I would expect a buying opportunity on that soon. So I am looking out for that to happen. We are getting quite oversold with silver at the moment. again, I would always want to pick my timing correctly, because if the price is going to be lower, in my opinion, it's worthwhile to get a lower price rather than trying to buy it whilst it's still breaking down. You ideally want to buy into strength and sell into weakness. You don't want to buy into weakness because the price could go lower. You don't want to catch a falling knife, especially if silver was to break even further down, break below the 15 level, break back towards 14 zone and revisit the lows here. But I suspect if we were to get as low as 14, especially down towards the 14 to 13 zone, which was a swing lows going back to December of 2015, even though the price could consolidate at those levels, I would not expect the price to stay at those levels for too long. So right now, silver, watching this market very carefully. Today, overall momentum is a little bit weak at the moment. It's broken down. Again, it's broken below these swing lows. It's starting to get very close to retesting these key levels here as well, back to around March of 2016. So we'll be looking for the price action around those zones. I am looking for a good buying opportunity on this soon for longer term positions. At the moment, overall weakness in silver, I'm watching very carefully at the moment, but certainly it could provide some really good opportunities in the weeks to come here, potentially forming a low over the month of July, moving into August as well. Remember, August is the start of the wedding season in Asia, where typically gold and silver demand does increase, and normally, but not always, normally you would expect that to provide, from a seasonality bias, some sort of support for the gold and silver market. So just have that on your radar as well. Now, if we move over to the S&P 500, currently the S&P 500 is rolling over a bit again today. So we can see here where it broke out to the upside on Friday, although it didn't create a higher high on Friday. We've still got this major overhead resistance channel, and in fact today it gapped up, but it's already filled the gap. And overall, if we go over to the higher time frames here, the weekly chart, I would still suggest that this market is rolling over unless we get a breach above all of this resistance at the moment on the S&P 500, and it has the ability to break out and move towards all-time highs. Otherwise, I would suggest the price is still staying contained, and we may well, within this week or next week, revisit the 2,400 zone yet again. I would suggest that really you want to be selling the S&P 500 from overbought conditions and then buying back at support. The 2,400 zone is providing a lot of support at the moment, 2,400 to 2,405. I would look for the potential for the S&P 500 to at least retest 2,407 or 2,400 over the course of July here. So another retest of that major underlying level of support. And if it does do that, if we do see a bit more of a further breakdown, we might see the inverse correlation with gold and silver getting a little bit of support as well. But overall, so far today, the US session the opening bell for the US session will open in about 12 minutes time, so we could start to see more volatility pick up for equities, the S&P 500. But today it's looking a bit weak. It's giving back some of the gains from the non-farm payrolls on Friday here, so we're starting to see it roll over. Although the headline numbers were strong for non-farm payrolls, there was some mixed and some negative data in that as well, in terms of the average hourly earnings and also the unemployment rate. So it's not a completely stellar performance from non-farm payrolls, which is why initially it did seem the markets overall reacted favorably to that, in terms of the US dollar rallying and also the S&P 500 rallying, equities rallying, the Nasdaq as well, and also the Dow Jones. But today we might start to see a little bit more follow through to the downside if the mixed reaction starts to follow through this week. And we've also got quite a few data points this week as well that we need to pay attention to as well, to just see what sort of impact that does have on equities, US dollar, gold, silver too. So overall today, my bias is to the downside. I'll be looking to see if we get additional momentum to the downside today. We'll see how that picks up during the course of the US session, which starts in 11 minutes. Also moving over to oil here as well. So oil at the moment, it has generated a sell signal last week. We started to see it roll over. It's already taken out Friday's low here as well. It's broken back below some major key moving averages as well. This rally to the upside, oil has now given back 60% of that rally after an incredible move from $42 US per barrel on US oil up to $47 US per barrel, and it got capped essentially technically at the 50-day moving average, running to resistance at that zone. It's now pulled back now for the last 4 days since last Tuesday's close. We've seen a rolling over and a pullback in price here. Now the question is, around this level, are we going to get support or are we going to continue to break down? And we are at a key level here. $44 US per barrel has been a key swing low on the chart, where it found support at the beginning of May. There is some suggestion that this actually could be a supportive channel if it holds, at this level at the moment for oil. So if we were to get some sort of a bounce at this zone, it could be a new trend channel developing if it holds on a closing basis above 44 US dollars per barrel today, and therefore could rotate back towards the 50 zone. So if it holds at that level, it would be a higher swing low and a higher swing high here, and it has the potential to rotate back towards the upper end of the trend channel. So that's a possibility. Also, if it breaks through support and closes below 44 US dollars per barrel, it could come all the way back to revisit the 40 level and possibly lower than that as well, and revisit this major underlying level of support. So it really is make or break week for oil, and today to a certain extent should overall decide that direction, because if we close today with a strong rejection candle on the daily chart from an oversold condition right now, that would indicate that possibly we're going to hold around 44 to 45 US dollars per barrel and form a new channel and then revisit with a new swing high in the days and weeks to come. Or if we close below this level, we may then just see further roll over in price and revisit 40 US dollars per barrel on US oil. So just have that on your radar as well for US oil at the moment. It's a very similar picture for Brent crude oil at the moment as well. So the same sentiment there as well. So you could argue that if we get supported today on a closing basis, that we're going to just form a new channel here on oil, and it may be able to hold on a closing basis above 46 to 47 US dollars per barrel. At the same time, if it breaks down, breaks this potential trend channel which is forming, then it could roll over, break below the swing low, and we would see a more significant move to the downside here for oil, which could really start to pick up some momentum. So we'll be looking to see really confirmation will come in the close today, and also over the US session this afternoon. Oil inventories on Wednesday will very likely be quite a big catalyst here for the price of oil too, so we'll be watching that very closely on Wednesday. If we move over and have also a look at the commodity currencies, it's worth just having a look and seeing how the price structure is playing out on these. We discussed this on Friday's Commodities Corner, where we still got the New Zealand dollar, US dollar on the radar here. It is breaking down and rolling over. It's still slowly but surely we're seeing this overall rolling over in price action here from an overbought condition, and we are if we break down a little bit further, we'll break in fact below Friday's low. We are below quite a few key moving averages here. It's starting to break down. It's just about finding support, the 21-day moving average at the moment. I suspect if we do break below that level and close below it, we'll start to open up the door for lower prices and a larger move to the downside here, a bigger breakdown in price. So overall, it's consolidating a bit today, but if we break below that support, I would expect a more significant push lower. Australian dollar, US dollar as well. At the moment, anyway, given the price structure right now, it looks like we're starting to roll over below a lot of key levels as well. We've got overhead resistance, which is very key here at the moment, but you could also argue we have got a bit of a pennant formation, which is consolidating right now, but I would suggest pressure is building up to the downside right now, and especially if we see more downside today with gold and silver, if they don't follow through to the upside and just continue to get sold into on rallies, I suspect the Australian dollar, US dollar could give way to support, especially if it breaks below the last 3 days of lows, so Friday, Thursday, and Wednesday's low, and if it can break also below the key moving average here, which is sitting around the 26-day moving average, I suspect then we could start to build up more momentum to the downside. We've still got our generated, our sell signal is still in play here, which has been generated on Australian dollar, US dollar. So we're looking short term for more downside unless it has the ability to surge and break above the last 3 days worth of highs. If it does that, then we could start to see a further retracement back towards resistance. But I would suggest today, New Zealand dollar and also Australian dollar are looking a little bit weaker here, and we might see some additional follow through to the downside here if we just get a continuation of what we've seen so far during the London session at the moment. So I'm looking at both of those quite carefully. US dollar, Canadian dollar as well is treading water a bit here after it broke down from support on Friday's non-farm payroll as well. So it's below some key levels right now. I'm watching this carefully for Wednesday's data as well, which we could see some significant moves on US dollar, Canadian dollar if we were to see further developments with regard to a rate hike on Wednesday for US dollar, Canadian dollar. So we'll be watching that carefully, see what trade opportunities result from that as well. So in my opinion, there's a lot to be keeping track of today, watching out for good trading opportunities as well. So I would definitely suggest you want to have, certainly you want to be watching gold and silver very carefully, the S&P 500, Brent crude oil, and also the commodity currencies, Australian dollar, US dollar, and New Zealand dollar, US dollar today as well. Okay, fantastic. So with that said, if you enjoyed today's analysis, but you would also like to get access to our live trade ideas, so the trades that we share with all of our traders each day at the Gold and Silver Club, all you need to do is go over to www.jointhegoldensilverclub.com, complete the application form, and of course, we will get in touch with you ASAP in order to get access to that. Complete the application form to get access to our daily live trade ideas shared directly with you, ready to implement. Who's it for? Who's the Gold and Silver Club for? Well, essentially, it's for traders who you might be experienced, or you're just looking to take your trading to the next level, or it could be that you're an absolute beginner and you really want to improve your commodity trading, your execution, and understand how the markets work. Now, the private members live trading room is comprised of the following. So we provide the following at the Gold and Silver Club. You get exclusive access to our live trading room webinars. You get live trade ideas shared with you, ready to implement. You get real-time trade notifications via email and SMS, so you're not missing out on profitable trading opportunities. You get details of where we enter and exit on each trade, ongoing support and mentoring to help you achieve long-term success, and exclusive access to our proprietary trading research to give you the ultimate edge in the markets. Okay, so again, to get exclusive access to the Gold and Silver Club, all you need to do is go to www.jointhegoldensilverclub.com, complete the application form, and we'll get in touch with you ASAP. Okay, fantastic. So with that, I wish you all good trading. Have a fantastic day, guys, and we'll definitely catch you here for the next session. And again, if you want access to all of our live trade ideas during the week and access to everything else that a membership of the Gold and Silver Club offers, do just make sure you make an application to join us. Okay, fantastic. Okay, with that, so we'll wish you all a great day, guys, and all the best, and we'll speak to you very soon. And thanks again to Sharice and the team at binary.com for hosting today's session. Okay, take care, guys. Thank you. Bye-bye.